Hello everyone, this is today's video analysis for July 11, 2019. Today we're taking a look at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. Looking here at the daily time frame, we really have two trends we're looking at here. The previous uptrend, the blue trend line, and the current downtrend, the black trend line. Let's focus in on the black trend line and the direction the market is currently going in, which is a bearish market or selling the USD against a stronger Canadian dollar. That's basically the way we're going to look at it. As this is going down, that means the US dollar is getting weaker against a stronger Canadian dollar here on the dollar CAD. So what we're looking for are clues to the currency pair going lower. We're looking for rallies to resistance. We're looking for breaks of support, for opportunities to go short in the direction of the trend. We also would look to the US dollar to see how that is performing. And in the past couple of days, we've seen a sell-off of the US dollar. So that's produced the past two red candles that we've seen here on the dollar CAD. We've seen oil, actually, which can produce a movement on the Canadian dollar, pressuring higher. Rising oil is good news for Canada, and we would often see the dollar CAD go lower on rising crude oil prices, and we've seen that. We'll look at that later on today in the trade room. But here we can see the market has been somewhat in a range or period of congestion. The black box down at the bottom right hand corner of the chart, pink, blue, yellow shaded area. We went back earlier this week in the trade room and looked at all three of those levels. The yellow zone, 1.3070, 1.3055, holding our current support. Let's zoom it in a little bit more here on that. So as you can see, there's the pink, the blue, and the yellow shaded area, and we're challenging that yellow zone again. We've already been here before. If you look just back here in the middle of that black box, you can see we challenged under here before, unable to sustain a hold underneath the yellow shaded area and turn right back around to the pink zone. So unless you've already taken a short at the pink zone, we've had limited opportunity to see profit going short near the yellow shaded area. Doesn't mean it won't break it and go lower. It just means right now it's having a difficult time. So if we see a continued sell-off of the US dollar, if we see a continued rising of crude oil, we will expect the potential for eventually this to break out underneath 130.55 and go lower down into 130.2510, which is the pink shaded area down at the bottom. Now we could of course have deeper levels to shoot for, but at least that's our closest or next support level down here, close to the 1.3000 level. Now it doesn't have to do that. If all of a sudden the dollar rallies again for whatever reason, we might look for it back to the blue or back up here towards the pink zone at the top of this black box again. So we need to watch for clues and evidence right around this yellow zone to either it's going to bounce off and go back up or break through and continue to go lower. Let's take it on down to the 4-hour time frame, and as we can see here, I don't think we have any successful evidence of that yet, and this is what I'm trying to avoid right here. Let's put a little blue circle here. This is what I'm trying to avoid. I'm trying to avoid selling the currency pair on an attempt to break out underneath 30.55 and have it turn around and go back up. This false breakout that I've circled back here on the left. It looks similar to what's happening right now. Not exactly the same. In fact, our previous 4-hour period actually opened underneath or right around the 30.55. Let's see, the open of this candle is 30.54. So we're one pip underneath that 30.55 level on the open of our previous red candle here. I don't know if that's deep enough to cause me to think that it's a breakout, but definitely challenging this yellow zone. Again, staying underneath it today, we look for the market to go lower, which is, of course, down here towards that lower pink zone, 30.2510 at the bottom. Getting back above, as it did back here on the left-hand side, may begin using this as support. What would cause it to go up? A stronger dollar. If the dollar starts to rally again, go up, or crude oil falls, or we have poor news for Canada, all of that would cause this to go back up, challenging back towards the blue in the upper pink shaded area here for the Canadian dollar. So watching this area right now, we're cautious about a false breakout like what happened here at the blue circle, but looking for opportunities in the direction of our current trend and the weaker dollar for the dollar CAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.